Yeah, good morning, everyone. So we are seeing some corrections in the Asian markets, mainly driven by the expectation of package from the China was not met, and we are seeing first during the market hour of India, we had seen weakness in the Asian in the commodity, and which continued even thereafter. So most of the commodities are down. Uh, Iron ore is down by 3%, steel 2%, aluminum, if we talk from closing of market in equity in India to now, is down by around 1%. Oil is also down by around $2. Asian markets are indicating negative trend, whereas US market is still showing some positive signs. That is continuation of the new president election, and which sentiment continue to remain positive even on the Friday and today in the futures also. Another thing which is impacting the Asian market is the dollar index, which has also moved up from Friday. Friday it was at somewhere at around 104.5, and now it is over 105. So generally, any appreciation in dollar index resulting to uh, emerging market decline and the FII selling. So quite possible we may see continuation of FII selling in today's trade. So we may continue to see some pressure on the Indian market as well. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open with a gap down opening, and we're likely to witness some sort of a selling pressure during the day. On the technical front, Nifty has immediate support levels at around 24,070. Any move below that level will track the Nifty towards 24,000 psychological mark, and below that level, 24,940 levels can be seen on the downsides. Whereas on higher side, as of now, the support is resistance is placed at 24,240 and 24,300 levels. The view will remain cautious as long as Nifty trades below the mentioned resistance levels. From the past few trading sessions, we are witnessing that the Nifty is continuously making a low top, slow bottom formations and facing a very strong resistance of a short-term moving average, say the 50 and 100 DMF. If Nifty breaks 24,000 psychological mark, we believe that it's likely to touch the fit of 200-day moving average over a period of time, which might take a Nifty towards 23,600 level as well. So the more depth is there into the market, try to book the profits on every rise and stay light with the long positions. Coming towards the bank Nifty, 51,570 is the first support level. Below that level, 51,340, 51,000 levels can be seen. whereas the resistance is placed at around 52,000 and 52,270. Coming towards the stock specific, Hindustan Unilever looks weak on the technical front. We have already initiated a sell call. The stock is facing a very strong resistance of the averages and their Bollinger Band. So we believe that the downfall can be seen up to 2380 levels. One can go for a shot at the CMP by keeping a strict stop loss of 2542 levels. Keep in mind that these all the future levels. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as per the overall scenario from the last week of our trading session, we have seen that in last week, major pressure was being witnessed in the first half of the week. After that, we saw some pullback from the supportive zone, but the pullback which came in the market was not holding that strong on the upside level because the Nifty failed to surpass the resistance zone of 24,500 level. In last 10 days of trading session, we have seen that the Nifty came near 24,500 level 5 times and it failed to get a stable about that level, and continuously selling has been witnessed from that level. As per the overall OI position also, we are seeing that at 24,000 right, striker put writer position is holding strongly, and in rest of the strike we are seeing that the call writer positions are heavier than the put writer position, due to which we expect the strength on the market to be on the negative front. Once the Nifty goes below 24,000 mark, the next support for the Nifty, as per the Y portion, directly comes towards the 23,800 to 23,700 level. So overall, the strength and overall setup on the market front seems to be on the negative front. Once Nifty goes below 24,000 mark, there will be fresh short positions which will be initiated in the market, due to which, as per the current scenario, strict stop loss need to be placed at 24,000 mark. Below that, new short positions can be created for 300, 400 points momentum on the downside. While on the stock and sector specific front, a counter that looks negative and positive in today's session will be on the positive front. Britannia, Metropolis, and Cummins India looks positive, while on the negative front, Oro Pharma, Aarti Industries, Apollo Hospital, and Coromandel looks negative in today's session. So that's it from better front. Thank you.
Good morning. Aarti Industries Limited posted the results on Friday. Results were below expectations. So the key impact was observed on the margin front, where more than 70% of company's portfolio overlaps with China, and the margins were impacted as China continues dumping. If we look at the top line, it grew by around 23%. However, operating margins stood at around 11% versus 16% in the same quarter last year. The management has revised its guidance downwards for FY25 EBITDA from rupees 1,700 crore to around rupees 1,000 crore. And while it expects to achieve EBITDA in the range of rupees 1,800 to 2,200 crore in FY28, we are negative on the stock over the near to medium term due to Chinese dumping concern. Epigrel Limited posted the result. Result has improved for the quarter. Revenue grew by around 31% on a YY basis. Overall sales volume grew by 6% during the quarter. The company is growing as per its plan to achieve the majority of its revenue from the derivatives and specialty business, where the contribution from this business is consistently growing from 46% in quarter two to around 59% this quarter. So 46% was in the quarter two of last year and 59% in this quarter. As a result, the margins have also improved to 29% versus 23% around in the same quarter last year. This is mainly on account of increase in utilization and volume contribution from the new projects that has commissioned recently. The management has announced capex to double its CPVC resin and epichlorohydrin capacities. The new capacities are expected to commission by first half of FY27 and will contribute to company's growth FY27 onwards. We are positive on the stock, where the company is strengthening its position in the specialty chemicals business. And currently it is trading at a PE of 22 times to FY26 earnings. Asian Chemical Industries posted the results below expectations. Revenue degrew by 17%. This was mainly because of the Asna cyclone in Gujarat that has impacted this sales during the August and September month. Margins were maintained at around 31% versus 33% in the same quarter last year. The stock is trading at a PE of 15 times FY26 CPS. We will provide further updates from the con call. Thank you.
Good morning. On the result front, there are three results from the auto sector, starting with Tata Motors. Tata Motors posted the result below expectations. Revenue from operations declined by 6.1% quarter on quarter basis and 3.5% year on year. EBITDA declined by 24% quarter on quarter and 14% year on year. EBITDA margin came at 11.7% versus expectations of 14.9%. PAT is below expectations. JLR result is also below expectations. We attended Tata Motors con call. So in PV, profitability was impacted by higher depreciation and development cost linked to the new product launches. Additionally, company increased price discount to stay competitive and high inventory levels, which also weighted on profitability. New launches including the Curve and Nexon iCNG were well received, and the company is confident in these models. This model has a potential to boost future PV performance. In commercial vehicles, the commercial vehicle industry in India saw volume decline in quarter two, impacted by slow infrastructural development, reduced mining activity, and seasonal factors. Talking about the JLR faced challenging quarter with revenue declining by 6% year on year due to production and sales were impacted by aluminum supply constraint due to the flood in Novelis. Sales in China were strong in quarter two, but are expected to face headwinds due to stress in the dealer network, high competition, and market volatility in H2. So the overall outlook for Tata Motors is neutral. Ashok Leyland posted the result above expectations. Revenue from operations grew by 2% quarter-on-quarter basis and declined by 9% year-on-year basis. But EBITDA grew by 18% quarter-on-quarter. EBITDA margin came at 12.3% versus expectations of 11%. PAT is above expectation. We attended Ashok Leyland con call, so the company expects demand recovery in H2 FY25 driven by increased government capex, high fleet utilization, and pent-up demand in buses. The management is optimistic about achieving stable or positive growth in MSCV segment for H2. They anticipate industry growth to be the range of 0 to 3% for the year, with H2 seeing a 6 to 10% growth due to seasonal uplift and positive market sentiments. Company aims to increase export to 50,000 units per year over the next few years, focusing on focusing growth in Africa, Southeast Asia, and GCC. So the overall outlook for Ashok Leyland is positive. Ola Electric result is declining. Revenue from operation declined by 26% quarter on quarter, but grew by 39% year on year. Company's loss increased on quarter basis, but decreased on year basis. We have also attended Ola Electric con call. So company target a year on year growth rate of around 50% in vehicle sales. Expansion into under-penetrated region and increased distribution coverage are expected to support this target. Company's Gen 3 platform expected to improve gross margin incrementally with a 20% margin, that is 2000 basis point improvement anticipated over the next 12 months. This platform will launch in January 2025. Uh, In-house cell production starting in quarter 1 FY26 is projected to add another 7 to 8% to gross margin over time as it scales. For FY25 and FY26, capex is expected to be around 800 to 1000 crore. Company has addressed previous service backlog issues and now target an 80% like T plus one service standards like service within 1 day, aligning with the industry benchmark. Expanded service infrastructure aims to support customer retention and satisfaction by co-locating service centers like new stores, especially in under-penetrated rural and tier 2 markets. So the overall outlook for Ola Electric is long-term positive. Thank you.
Good morning. Vedanta Limited posted its results. Result is in line with expectations. Revenue from operations grew by 5.2% quarter on quarter and has reduced 3.4% year on year. EBITDA has reduced 1.2% quarter on quarter and 14.4% year on year. EBITDA margin came at 26.1%, which was 27.8% last quarter and 29.5% last year, same quarter. Adjusted PAT was slightly above expectations. We also attended the con call of Vedanta. Company is producing alumina at the annual run rate of 3 million ton in November versus 2 million ton annual run rate in second quarter. Alumina prices has increased from around $350 to over a range of $750 per ton, but company expects to maintain the cost of production of aluminum in the second half between guided range of 1,625 to 1,725. Power cost will be lower by $40 to $50 as coal cost premium for FAS has come down to zero. Company has done modernization of power plant. Company is expected to do 30 to 35% higher production of alumina in the second half as compared to the first half of the year. The demerger process is progressing well with the first NCLT hearing successfully completed and it will be completed by 31st March 25 as per the management. The company expects to achieve its highest ever annual EBITDA in FY25, driven by strong performance in second half and ramp up of major projects. Despite initial setbacks due to transportation permits and heavy rainfall, Vedanta's Goa mining operations have stabilized and the company is confident in achieving its annual production guidance of 11 million tons. The company is progressing with its coal block projects with the Kulgai and Radhikapur blocks expected to be operational by quarter one 2026 and has received necessary forest clearances and is in the process of land procurement. Post QIP of 8,500 crore, OFS of Hindustan Zinc of 3,133 crore, dividend payment of rupees 12,308 crore, capex of 4,277 crore. Vedanta's debt has reduced from 61,324 in Q1 FY25 to 56,927 crore in Q2 FY25. The outlook is long-term positive for the stock. Thank you.
Yeah, from the other results, what we see that SBI has reported numbers, though it had a very large other income in this result, and if we exclude that, then the results were in line. But if you see the other parameters, all have shown steady improvement. Deposit has improved, advances has also improved by around over 15%. Asset quality was also stable, and and the expenses was also under control. So, excluding one of large income of the treasury gain, other all parameters were okay. So SBI results, if we consider that perspective, then it has shown a steady improvement, and the outlook for the SBI is positive from here. Then the other companies which has reported good numbers in this quarter is LIC. LIC has reported good numbers. Then GE T&D has reported very good numbers. And Shami Hotel has also reported good numbers. whereas Divi's Lab has also shown a result which is ahead of expectations. So, and apart from that, the negative results were Asian Paint and Aarti Industry has reported negative results and can see some pressure on the prices. Whereas Ashok Leyland, Vedanta and Tata Motor, though has reported numbers below expectations, but outlook for them are positive. So any correction in that can become an opportunity to buy the stock. So that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting a correction in gold and silver prices. Gold prices tends to be weak below 78,000, and silver the major area around 92 500 93,000. So weakness below these levels will be witnessed. On downside, again, gold prices are expected to test 76 500 76 200 on downside. So any pullback around 77,000, one can initiate a sell with a 77 with a stop loss of 77 300, and on downside 77 700 500 is the level where we expect prices to test. And silver, one can sell around 91 300 with a stop loss of 92,000. And on downside again, major support lies at 90,000 and 89 200. Whereas crude oil also, we are expecting prices to test 58.50. So any pullback around 59.50, 59.80, one can sell with a stop loss of 6050 levels. And in natural gas, prices already have opened gap up. So by around 234, 233 levels and maintain a stop loss of 227. On upside again, 242, 250 is the level where we expect some profit booking. So if prices are closing about 236, then we remain positive. And in metals, one can sell copper around 838 levels with a stop loss of 843. And again on downside, 832, 830, where one should book profits. Similarly, zinc also, one can initiate a sell around 281 with a stop loss of 283. On downside, 278, 277 is the level where we are expecting prices to test. So that's it from us. Thank you very much.